Thanks for checking out another clip of the Cashflow Contractor. We'd love to have you as a part of our audience. Click subscribe wherever you get your podcast.
Martin, and Lisa, you can speak to this too, the collections process, not just on the deposit, but just in general, has to be a lot faster if you're going to have a good cash flow. And then also, you need to make sure that you're sticking to your schedules that you estimated on and not let projects go longer than they need. Maybe let's like dissect why that's so why that matters. So both of those things matter so much.
Well, why do they get off schedule? Weather and every other kind of thing, right? Stuff happens.
Right.
But generally, I was speaking to my good friend contractors, and I've got two in mind, and they'll know who I'm talking about. Generally, you bit off more than you could chew, right? And if you approach jobs, get to have a plan, you collect the cash, you know your costs, so you're doing things right, and you keep it small and you manage that job and you actually make a deposit that actually has gross profit in it, and Lisa sends you your financial statements, and not only did you make some money, but there's some money in the bank and it belongs to you. And do that a few times. I think if this is answering your question, Khalil, but do that a couple of times, and you've learned how to do it. You've built up some reserves, and you hire some help. Yeah, maybe you had one guy, but then you get good at that. But you build into it. And what I've seen, Lisa and I had a mutual client a few years ago, and he was really at the place where he should have done one of what he does. And he jumped out, he's got 8 going, right? Doesn't have the personnel and subcontractors were doing things wrong because there was nobody there. And then, who's going to pay for it? And just start and get control, right, Lisa?
Yes.
And know that you have it.
And I do think that there's a difference between when it's a one-person shop versus when you're growing and you've got a team. And there's a difference and this is something I would caution people on, is to make sure you have a cash cushion before you start growing and before you start hiring people, because you need to be able to have that dedication to manage expenses when it's just you doing the projects, and have some savings before you're bringing on other people.
We talked about that the other day, but and I get it every client. How much is enough for that reserve?
Yeah.
What are your thoughts?
Let's talk about
3 months of operating expenses is just kind of my fat sum of it.
And can you define operating expenses for our listeners?
Yes. So, and Martin was kind of asking me, is it your cost of goods sold or is it just so when I look at operating expenses, I'm looking at what is kind of below the line. Is your overhead, it's your insurance, it's your rent, it's your auto payment, everything, payroll. If you've got people on payroll that aren't that are managing the office, that are not out there doing the service, so it's just the below the line expenses.
And okay, and so that it's including yourself and the draws that you take as salary or whatever right? So because that's part of it too, right?
Yes.
Okay.
Yeah,
So
you've got to
3
pay
months.
yourself also. Yes. And a lot of times, not to get technical and be the tax nerd that I am, but your draws, a lot of times you don't see them on your P&L. And so that's something to keep in mind. If depending on how you're structured, your draws are going to show up on the balance sheet. So you kind of always have to factor that in when you're looking at what your operating expenses are.
That's a question to ask you, Lisa, too. I've encountered a lot of business owners don't take a salary.
Yeah.
Do you see that? I mean, it's kind of like kidding yourself. I can take draws when I need it. I said, no, if you've got a profit and you're not taking a salary, you don't really have a profit because you're working for free. But I take draws, but like you said, it's not on the P&L. Do you ever run across that, or?
Well, so,
Most of your
if
guys
they're in
pass
a
that?
corp, they can have wages, they can pay themselves as an employee, but they have to be an S corp. Or if it's a partnership, they could do guaranteed payments. And what I tell people is a lot of times people will do the draws, but I try to tell them just to be regular with their draws. And so then when we look at their budget, the amount that they're pulling as a draw every month it's in the budget as something that we're accounting for. But it just doesn't. A lot of times people get real excited when they see their net income and, say it's 20,000, but they're forgetting that they pulled out 5. So it's really 15.
Right.
It's just an easy thing to forget.
Yeah. Okay. So let's walk through like the basics of that, like small tactics that you can use to save that first 3 months. What are things that you're working with clients and like actual advice that you give? Hey, cut this, look at this area to save. What are some things that you typically see, Lisa?
The biggest thing I say is get rid of your personal spending that you're running through your business. Because people use their business account like it's just a free check card. And so it's like have a business card and only use it for business expenses, else you don't really have a true idea what you're spending on your business. And that kind of goes back to, we could call the theme of this episode, know your numbers, because you got to know your numbers. You got to know what you're spending. And if you're running every trip to 7-Eleven where you get a slushie through there, then you're not really going to know what it's costing to run your business.
Yeah. And I think let's break down know your numbers a little bit, because I think sometimes for people that can feel, well, I don't want to talk to my accountant, I don't want to open up QuickBooks. But like, what are the numbers they really need to know? I think the costs we've already mentioned, like know what your real costs are to get the right deposit amount. But why don't you walk us through some basic numbers that everybody should know?
Yeah. And it's, this is a little more difficult than talking to one client because there's a bunch of different industries that I'm kind of thinking
Sure.
of. But I'll give an example with COVID. Working with one of my clients is we separated out their cost of goods sold, like what products they had to buy to deliver their service. And as we were looking, and the cost was an electrician, and the cost of wire was going up, and it was just crazy. And I had this conversation with him. I said, you have to raise your rates, else you're not going to make it. And he's like, but I'll be the first to raise my rates. And I said, yeah, but you'll still be in business when your competitors won't be. And it was just kind of a game time decision because the cost of goods sold escalated so quickly that it just, it threw the numbers off, it threw the profitability off because the increase was really, and it was, I gave the example of wiring, but it was across the board. Everything was costing more of the supplies they were having to order. So just being aware of it, knowing what, the fact that they were able to see month over month that what their cost of goods sold were, and just to see the increase, the trajectory gave us a heads up about needing to make price adjustments.
Thanks for checking out a clip from the Cashflow Contractor. We have full episodes where we go deep on topics that help you grow a construction business that runs without you, so you can have less stress, more time, more money. Now, we've got other videos, other clips, but if you want to check out the full episode for this clip, you can click wherever our editor put it. It might be here, it might be there, it might be over my face, I don't know. But thank you for checking us out. We'd love to have you as a part of our audience. So subscribe or check out a full episode wherever you get podcasts.